chapter 3, just introductions to what you have for chapter 3. And then after another maybe half an hour, I'm going to discuss for your tutorial. It won't take long for tutorial ones. Okay, so just stop sharing your attendance here. So maybe you can scan later. At the end of the class, I'm going to share again. Okay, for the attendance. Okay, so already 35 there. Okay. So just stop this one. So we're going to look at your notes first, your notes, and then continue with your tutorials. Okay, going to record this one. Okay, so the new topics here for chapter 3, we have 2 parts also. So chapter 3, it take about 10 hours to discuss on chapter 3. So many things that we have in chapter 3. But make sure that you understand chapter 2 because chapter 3 is more complicated than chapter 2. See? Okay, so we're going to look at chapter 3 here. Okay, the first one, we're going to look at the changes in ownership structures or interest before this interest. And then the other one, you have changes in ownership structures. Yeah? Okay, so we're going to look at the first one on the interest, changes in the ownership interest. So for the changes in ownership interest, maybe you need to use another color, not this color. Okay, so going to have interest here. For example, here there are 2 types of changes here. Is before you have previously there is no control. Maybe you have another only 10% shares, and then after that you add some more. So you add maybe another 50%. So now it becomes 60%. So you're going to have a control. So you start with no controls, and then you add some more shares. You got some more shares, and then you have a controls over the company. Okay, and then the other one is relate with that you already have a control, so you already have a control, already have 50%, but you add some more shares. Maybe you add another 20%. So now it becomes 70%. So this is what we call a changes here. Changes here start from the no control. After that, you add some more share, it become a control. Or you already have a control, but you add some more shares, then your control should become more. You are going to have more powers here. Instead of having only 50%, now it becomes 70%. So there are 2 types here in terms of changes here. Okay, so the things that we going to learn from this chapters here, going to look at the explains. Okay, students are able to explain the acquisitions of subsidiary during the accounting period. So previously in chapter 1 and chapter 2, we look at the acquisitions at the year, so at the beginning of the year, but this one is during the accounting period. For example, here the accounting period here is on starting from 1st of January until 31st December. But you acquired here somewhere on 1st of June. So this 1st of June here is considered as the acquisitions during the accounting period. Okay, not at the beginning of the year. Yeah? Okay, so we're going to explain about that one. Okay, the first objective. The second objective here is to account for business combination achieved in stage of piecemeal acquisition or step acquisition. For example, here at the first place you have 10% and then you add another 20%. During this time, there is no control yet because your shares is only 30%. And then you add another 30%. So now it becomes 60%. So during 60% here, once you have a shares more than 50% said that you have a control. So when you have a control, then you need to prepare a consolidated financial statement. So we look at the step acquisition. Yeah, start with the normal investment, and then this one is also maybe associate. Okay, and then become a parent. So okay, investment, normal investment, then it become associate, and then after that it become a parent. So that one is a piecemeal acquisition or step acquisition. Okay, and then we're going to account for the acquisitions of additional share. Account acquisitions of additional share means that you already have a control 50%, and then you add some more shares. Okay, maybe you add another 10%, becomes 60%. So this one is additional shares. You already have a control, but you add some more shares. Okay, the next one, you have a disposal of shares. So for a disposal of shares here, you dispose the share in a subsidiary. When you have a total disposal, means that some sort that you sell your subsidiary. So means that there is no more subsidiary when you have a total disposal. The second one is a disposal without loss of control. Disposal without loss of control here is that you have 70%. For example, you have shares of 70%, maybe you sold or you sell, okay, 10%. So now you still have 60%. So 60% means that you still have a control. Okay, the other one is with loss of control. For example, 70%, and then you sold, okay, 40%. So now you only have 30%. So once you have a 30%, means that you don't have a control. Okay, maybe during this time it become your associates only. Yeah. So that is for disposal. We have three things. Total, without loss, and with loss. So three different accounting treatment. But for the acquisitions, we have only have two, the piecemeals, and then the other one is a additional shares. And maybe for today, we just for today's class, maybe able look at the first objective only. Yeah? Okay, and then the last thing that we need to prepare here is to prepare to do here is to prepare a consolidated financial statement. The same thing, sir. Okay. So we're going to look at the first one, which is the first objective here is acquisitions during an accounting period. So, okay, the the subsidiary profit can only be included in the statements of comprehensive income from its effective dates of acquisitions. Okay, so current year profit need to be classified into pre-acquisition profit and post-acquisition profit. So for example, here you acquired here, let's say on 1st of June. Okay, acquired during this time, and then you have 60% control. For example, say 60% control. Okay, the profit that are incurred between 1st of January until 31st May, the first 5 months here is considered as a pre-acquisition profit. Okay, pre-acquisition profit, and then parents are not entitled for this profit. Okay, the profit that are incurred from 1st of June until 31st of December. So you have another 7 months here. So this 7 months is considered as a profit after or post acquisitions profit after the acquisition. So parents are entitled for this profit. Parent and also NCI. Because you have, if you have a control only 60%, means that NCI have another 40%. Yeah? So both parent and NCI is only entitled for a profit after the acquisitions. Okay. We have two methods to prepare for a consolidations. Okay, you are using the pro rata basis, and then the other method here is in a full year basis. But the standard does not allow for full years basis or in full. So means that we need to use a pro rata basis. So pro rata basis here, for example, here the total profit for the year, okay, from 1st of January until 31st December, let's say the total profit for the subsidiaries here is 10,000. For example, say 10,000. So this 10,000 here you need to allocate between pre and post. So for pre here, if 5 divided by 12 time with 10. Okay, and then this one, 7 divided by 12 here, time with 10. So parents only entitled for this portions only. Yeah? So this is what we call with pro rata basis. You need to divide based on months. Months when you have controls over that company, over that subsidiaries. Okay, we try to look at the examples that we have here for the pro rata basis that we have. Okay, so AA acquired 75% interest in equity of BB on 1st of September. So you acquired here on 1st of September. So means that we're going to have here is 4 months. 4 months here is a post, post. and then another 8 months here is a pre. Okay. The COI here is 12 million. Cost of investment, shares of capital is 10 million. This is the segments of comprehensive income on 31st December 2017. Yeah? So this is what you have for BB. Now your subsidiaries here is BB, but BB was acquired on 1st of September. Yeah? Okay, parents have 75%, so means that NCI has another 25%. Yeah? Okay, so this is what you have for the statements of comprehensive income. So means that you only entitled profit for 4 months only. Yeah? Okay, so this is information that we're going to need to know: the revenue, expense, profit before tax, and then taxation, profit after tax. Okay, returns earning brought forward is 12.5 million. So returns earning brought forward, and then this is returns earning carry forward. So returns earning carry forward here is when you add these two figures together. So you're going to have 5875. Okay. And then it said that the profit of BB Berhad accrued eventually throughout the year. So most of the time you're going to find these words, accrued eventually throughout the year. So we assume that you're going to have the same profit for each month, for each month. So that's why when we want to calculate here, you just portions here. We want to calculate the profit here. So profit here, we're going to time for the post here, how much the profit that you have here. So for the post here, it's 4 over 12. And then this one is for the post acquisition. And then for the pre here is 8 over 12. So for the pre here. Okay, we only consider about the post here. We don't consider about the pre here. So this is what it means by the profit accrues eventually throughout the year. Assume that there is the same profit for each of the months in the years. Yeah? Okay, so this is what you have for the statements of a comprehensive income. Okay, and then I'm going to look at the consolidated. We're going to prepare for the consolidated. Yeah? Consolidated and the movement in the RE. So now we're going to have here parents is the AA, and then BB here is a subsidiary. So this one is for 1 year, information for 1 year. Okay, the next one is information for post acquisitions only. Okay, so for post acquisition, so means that after 1st of September, so means that we're going to have 4 months. So 4 months here need to divide by 12 because we need to prorate. Yeah? Okay, so for BB here, the amount of revenue that you have here is 12. So 12 here needs to time with 4 over 12. Yeah? Okay, so you're going to have 4,000. So this one, parents plus this 4,000, so you're going to have 54. The same thing for the COGS, also time with 4 over 12, so you are going to have 2.5. So 30 plus 2.5 here, so you're going to have 32.5. So this one minus, so you're going to have profit before tax. So profit before tax 21,500, and then minus the taxations here. This one also time with 4 over 12. Every items here. This one you don't have to time because you just calculate this one. Okay, this one no, you don't have to time. This one also no, just based on this one, the figures that we have here. Okay, for the taxations here, we need to time with 4 over 12. So you're going to have 375. We'll bring this one here, add together. So you're going to have 5375 here. So minus these two figures. So you're going to have 16,125. Okay, from 16,125 here, we need to allocate to parent and also to the NCI. Yeah? So NCI portions here from this profit, 1125 here, time with 25%. So when you time with 25% here, going to have here 28125. And then for the parent portion here is 16,125 plus plus minus this 28125. So this one is allocations of profit to parent. Okay, and then this amount add with the beginning RE brought forward. So you're going to have here the ending RE here will be 27,843. So any questions that you have here? So the important things here, you only need to consider items, okay, or the post acquisitions only. So every single item that you have in the statements of financial positions or statements of comprehensive income need to portion with a period. So the period that we have for this examples here is only 4 months. Yeah? Okay, any questions that you have for these examples? Okay, so we need to prorate. Yeah? This one is a methods. Only this method is allowed by the standards. So we cannot use a full year. So you only use a prorate methods. So any question for this one? Understand this one? Okay. Any of you? Is it okay for this one? Okay or not okay? Okay, yeah. So this one is related with the acquisitions during the accounting period. Yeah, accounting period. Okay, the second objective here, you have the increase in shareholding. So the things that you need to know here, when you acquire during the accounting periods here, you need to prorate. Yeah, prorate. All the item need to prorate based on the period starting from the date when you start have a control over the subsidiaries. Yeah? Okay, so the next one we have the increase in shareholdings. Yeah? So the increase in the shareholdings here, we have two things that make an increase in the shareholding. Okay, the first one is relate to, okay, two scenario that relate with the increase in the shareholding. Okay, the first one is step acquisition. Step acquisitions here, you start with maybe 10%, and then you add another 20%. It's now become 30, not yet controls, and then add another 30%. So now it becomes 60%. So once you have a 60%, then you have a control. Once you start having a control, then you need to prepare a consolidated financial statements. Yeah? So this one is called as a step acquisition. Start with no control, add some more share until you have a control. Yeah? Okay, the other one here is increase in a controlling interest. So increase in a controlling interest here means that you already have share more than 50%. You already control that subsidiaries. Okay, let's say you have 55%. Okay, and then after that, you add another 10%. So now it becomes 65%. Yeah? So you already have a control, but you add some additional shares, yeah? Increase in shareholdings. Yeah? So there is two scenario that lead to the increase in the shareholding. Okay, either through the step acquisition or increase in the controlling interest means that you're going to have more controls. Yes, the thing you already have a control, but you add some more, so you're going to have more control over that company. Yeah? Okay, so for step acquisition, we're going to look at the first one. Yeah? For the step acquisition, okay, going to look at you're going to achieve business combination achieve in stage. Achieve in stage here is when you bought the shares and then you have more than 50, then consider that you have a business combinations. Okay, so for examples that we have here, on 1st of June 2017, you only have 15% interest. So during this time, it's normal investment. B, you have investment through fair value through profit or loss, or the other one is fair value through others comprehensive income. Just a normal investment, no control yet. Yeah? On 1st of June, you add another 45% here. So now on 1st of June, you have 60%. So once you have 60% means that more than 50%, so you start have a control. So starting from 1st of June 2018, you need to prepare a consolidated financial statement here because you already have a control over that company. Yeah? So it said that the need to consolidate the subsidiary only from the date in which the control is achieved. So starting from 1st of June, 1st of June, then you start to prepare a consolidated financial statements. Yeah? Okay. Okay, the effective date of control is at the time when the interest of parent in subsidiary is more than 50%. Yeah? So the acquirer shall remeasure. So this is the thing that we need to do when you have the sub acquisition. you need to remeasure its previously held equity. So you will need to remeasure the previous equity. Yeah? So the purpose of to measure a previous equity here is to find the fair value. So we need to use the fair value. So the value of the equity here should be the value at the dates of remeasurements. So you need to find the new fair value. So the difference between the fair value and the previously held interest and its carrying amount is recognized in a profit or loss segment as a gain or loss on remeasurement. So you need to compare, you need to find, remeasure. So once you remeasure, you're going to have a fair value. So the fair value need to compare with the CA. So the difference between CA and fair value is here, you're going to have either gain or loss on remeasurements. Yeah? Okay, gain or loss in remeasurements. It depends. If the fair value is more than the CA, then you're going to have a gain. If the fair value is lower than CA, then you're going to have a loss. Okay, this gain or loss on remeasurements will be transferred to your income statement or profit or loss account. Yeah. As if the previous held interests are disposed of and reacquired on the dates when the control is achieved. We assume that the old investment was disposed and then we reacquired or that one again reacquired at the acquisition state. Okay. So at the first place, the old investment, we assume that we dispose, and then that's why we need to recognize any gain or loss. And then after that, we reacquired that one again. Reacquired the old investments together with the new investments at the acquisition states. Okay, goodwill here, goodwill is calculated only once. We're going to calculate goodwill only once at the date when you have a control. Only once. Okay, it's calculated only one at the date when you have a controls over that company. Yeah? Okay. Okay, we try to look at this examples. Yes, examples here. On 1st of January 2017, you have 15%. So during this time, there is no controls yet. Yeah? The cost of investment is 40. So this is the CA. So the return profit of XY here is 60,000. On 1st of June 2018, okay, now it's bought another 45%. So during this day altogether, you're going to have 60%. So once you have a 60%, parent has a 60%, means that NCI have another 40%. So during 1st of June here, when you have more than 50%, so it seems that you already have a control. So your acquisition dates here will be on 1st of June. So at the date when you have a controls over the company. Okay, the cost of investment, the one that you paid for the 40% shares, the new shares that you add here is 130. Okay, the return profit on 1st of June here is 130. So this is your acquisition date. So we're going to use this 130 as a returns earning at acquisition date. Okay. So on 1st of June, the previously held 15% interest and the remaining 40% NCI here was measured at a fair value of 45,120. So on 1st of June here, okay, the 15% here is measured at 45,000. So that 45,000 is the fair value, and then the NCI was measured at 120. Okay, so this is information that we have here. Okay. So this is the balance sheet. If you look at here, the balance sheet here is on 30 of June. So 30 of June, shares capital, there is no changes in the shares capital. Okay, you need to know when is your acquisition date. Acquisition date was on 1st of June, 2018. Okay, the shares capital is remain at 150. There are no changes, but the return profit here on the acquisition date was 330. So means that there is an increase in 10. So increase in intents here means that there is an increase in profit. And then this profit are entitled both to parent and also to the NCI. So increase in the RE here. Okay, compare with the at the acquisition date, the RE here is only 130, but now it become 140. So means that there are increase by 10 here. 10 here is considered as an increase in profit. Yeah. Okay, investment in XY. So investment in XY here, the previous one, 15% here is at the for 40,000, the carrying amount, and then you add another 135 here is for the 45%. So now the total investments that you have here is 175. The investments here is at CA carrying amount. Yeah. Okay, so that is informations that we have here. Okay, so the questions ask you to calculate. Okay, you need to calculate the gain or loss that should be recognized, and then calculate the goodwills, and also prepare the consolidated journal, consolidation journals for the year to the ended 30 June. Okay, and then the ABC use a fair value to measure NCI. So use a fair value to measure NCI. So the NCI value here will be 120 based on the amount given in the slide 9. Yeah, before back to slide 9. Okay, they said that the NCA value was 120. Yeah. So when you measure the NCI at the fair value means that the goodwill sale need to be allocated to parent and also to the NCI. Yeah. Okay, so we're going to look at the first one. Okay, the first one we need to calculate the gain or loss. The gain or loss is going to be recognized in statements of comprehensive income. So the gain or loss here is referred to the gain or loss on remeasurement. Yeah? What we're going to measure here, we're going to measure the 15% equity, equity, previously held equity. So the formula for gain or loss here is a difference between fair value minus the carrying amount. Okay, the fair value is already given at 45, and then the carrying amount here is 40. So you're going to have 5 here. So 5 here is considered as a gain on remeasurement. So this gain on remeasurement shall be transferred to your income statement or statements of comprehensive income. Next, we just look at this. So is it okay with this one? So just compare between the fair value and also the carrying amount. Yeah? So we're going to have a gain here. Gain of 5,000 here need to transfer to the income statement. Yeah? Okay, the next one we're going to calculate the goodwill on consolidations. Okay, we only calculate goodwill on consolidation once only. Once here at the date when you have a control. So the date that you have a control here is on 1st of June 2018. Okay, so it's prepared based on both. This one is method, but we're going to use this one. We're going to use NCI at fair value because it already mentions that the NCI was measured at fair value. So we're going to use this method. But we need to prepare both here because we want to know how much goodwill that we're going to allocate to parent and NCI. So the one that you prepare for the NCI at the net identifiable asset, then we know that goodwill for parents. Yeah. Okay, because for NCI and NIA, there is no goodwill for NCI. So the amount of goodwill is 100% solely allocated to parents. So we prepare both. Yeah. Okay, the cost of investments, you have the new one. So the new one is 45%. So you have 135. And then plus another 15% for the previous one using a fair value, of 45,000. So the COI that you have here is equals to from the previous one, okay, you have 45, and then from the new one, you have another 135. So altogether, you're going to have 180. So this one is the COI. Okay, now I'm going to calculate for the NCI. So NCI only hold 40%. So 40% time with NIA. So the NIA that we have here is 280. Where do you get that 280 here? From shares capital. And then the RE should be RE at 1st of June. Yeah? So 130. So altogether 280. So 40% time with 280. So you're going to have 112. So 112, 180 plus 112. So you're going to have 292. So 292 compare with the net identifiable asset 280. So you're going to have here is 12,000. So this 12,000 is a goodwill. There are solely two parents. Okay. Because once you use the NCI at the net asset, there is no goodwill for NCI. Okay, now we're going to look at for the second method, NCI at fair value. This is the same one, the COI for 45%. This one is COI for 15%. And then this one is 120 is a fair NCI at fair value. This one is given in slide 9. Refer to slide 9. It's mentioned that the NCI at fair value here is 120. So when you total up here, it becomes 300. Compare with 280, so you're going to have 20. From that 20, we already calculate two parents here is 12. So it means that the another 8 here is going to allocate to the NCI. Yeah? Okay. So any question for the goodwill here? Goodwill we only calculate once. When we calculate that one? At the date when you have the controls, yeah? When you have the acquisition, when you have shares more than 50%. So any questions that you have for the gain and also for the goodwill here? Any questions? Any of you have a questions here? Is it okay with that one? Okay. 35 of you there. Is it okay?
Okay.
Okay. Only Naura. What about the rest? Okay, so we're going to proceed with the journal entries. Okay, for the journal entry, the first one we're going to record for the gain. Gain. So gain on a remeasurement. So for gain on remeasurement, going to increase the amount of investment. So you're going to debit investment and then credit gain on remeasurement later. This account going to be transferred, or this amount going to transfer to the income statement. Yeah. So this one is to record the gain on the previous held interest, the 15% interest. Okay. And then the next one, we're going to eliminate the COI. The COI that we have here is 180. So from 180, 60% time with 150. And then RE, 130. And then goodwill here is from the calculation previous year. You are going to have 12 for parents. And then credit investment in XOI or in XY or COI. Okay. This one is for parents. This one is for parent. Okay. Parent, okay, and then just move to the NCI later on if you have a question. Okay, for the NCI here, NCI going to have two journal entries. One journal entry here is to record. Actually, we prepare this one first to record for the allocations of profit. And then the second journal entry is to record for the NIA shares of NIA. Okay, we look at the profit first. Okay, the profit that we have here is 10. Where does 10 come from? The difference between in the RE ending balance on 30 of June, the amount of RE here is 140. On 1st of June, the amount here is only 130. So 1st of June here is your acquisition date. Okay, date when you have a control. So means that there is an increase by 10. So increase by 10 here is from the profit. Yeah. Okay, if that one is reduced, maybe because of the dividend. But in this case, you have an increase. So the increase here is because of the profit. So this profit need to allocate to parent and also NCI. NCI only have 40%. Parents have 60%. But for parent, we don't come for this one yet. We just prepare for NCI only. Okay, so for the NCI, debit NCI, segments of comprehensive income, because we want to transfer from RE or from profit to the statements of financial positions. Okay, so debit here 4,000 and then 4,000 for this one. Yeah? Okay, now we look at the allocations of NIA here. So the allocations of NIA shares capital 40% time with 15. Okay, and then return profit 40 times with 130. Goodwill on considerations, you have 8 from the fair value methods, from the fair value method that we calculated previously. And then the NCI here is 120 from fair value method, which is slide 9. Refer to slide 9, where to get this figure. Okay, so that is what you have for the step acquisition. Okay, step acquisition, when you start a control without a control, and then after that you add some more shares until you get a controls for that company. So, any questions that you have for these examples? Any questions? Okay, I'm still waiting if there is any questions. Any of you? Is it okay with this one? So many of you there. Why you are so silent this morning? What about the rest? Do you have okay? We okay? Yes, okay. What about the rest? Okay, if you're okay, I think that I'm not going to proceed with the next slide 16, because I want to discuss with you. Because if we proceed with slide 16, it's taken more time for that one, yeah? Because there is examples of the 3.2. It takes time for that one. Okay, so never mind. This one is under step acquisition, since we're not finished with the first objective. Okay, the next one we're going to discuss on your tutorial. I just want to stop up to this point. If you do not have any question, we're going to proceed with your tutorials. Yeah? Okay, no questions, sir. So if there is no question, make sure that you have the answer tutorial beside you. So you just mark yourself your tutorials and check which answer that you have a difference. Going to discuss that one together. I'm not going to do that one alone. Hopefully that gets a response from you. Okay. So just stop sharing this one. So going to proceed with your tutorials. Tutorial one. Okay, this is the one that you have here. Okay, tutorial one. Okay, so we're going to discuss your tutorial. Okay, hopefully that there is a response from you guys. Okay, so we're going to look at this one, yeah. Okay. Okay, JF acquired 60% interest in the equity capital of MN on 31st December. At the acquisition date, MN has disclosed in the notes to its financial statement a contingent liability of 800,000 involving a pending lawsuit in which the lawyer advised that there was a high probability that the company would lose the case. Prepare consolidated journal entry for JF. Okay, Chia, how do you prepare for this one, Chia? Just read from the one that you have in your tutorials, the answer for your tutorials. Okay, you. What about this one? It's about the law, contingency liability here. So what about this one? Any response from Ambassador Chia? What about this one, Chia? Just read from the one that you have in your answers there. Okay, please, we don't have much time for discussions here. I really need your response there. Okay, what about this one? Are you prepared for this one?
Can I answer it, Doctor?
Okay, please, because we don't have much time for this one, yeah?
Okay, my answer is debit revaluation reserve of debit revaluation reserve and credit lawsuit liability of 800,000.
Okay, you're going to debit your revaluation reserve and then credit, what else? The credit side?
Lawsuit liability.
Lawsuit pending. Lawsuit,
Yes,
lawsuit liability. Okay. So 800s and 800s. Yeah? Okay. So it said that Naura, is it the one?
Shazmimi, doctor.
Sorry. I cannot see that one. Okay, so thank you. It's Mimi. Okay, so the revaluation reserve. Okay, you're going to debit a revaluation reserve because if you still remember last time, when you have increase in the value of asset, you're going to debit an asset, credit a revaluation reserve. But this time you have a liability. So once it's a liability, it's going to reduce your revaluation reserve. So that's why we're going to debit a revaluation reserve and then credit. Okay, so it said that you just follow the one that it mentions here, MMN disclose in the notes as a contingent liabilities here. So instead of put a lawsuit liability, put it as a contingent liability. But you can accept both. But we just follow the one that are disclosed in the note. So you're going to put it as a contingent liability. Shazimi, okay with this one? Okay, I don't say this one is wrong. Okay, but you just follow the one that you have in the notes in the financial, what terms that the company use. So since the company use a contingent liability, just put it as a contingent liability. But we still can accept this lawsuit liability. Yeah. Okay. Okay. So you okay with this one? Yeah. Okay. So we move to the second questions. Okay. If you have a different answer, please. Okay, so second question 2 and take question 5, we're going to use the same information that we have here. So TT acquired 60% interest in DD on 1st of January. The purchase considerations here is a cash. We have a cash and then we have a deferred liability, cash of 1 million, deferred liability of 5 million. So once you have a deferred liability here, you need to calculate for a present value because it's going to be paid on 1st of January 2022. So now it's January 2020. So you have here 2021. So 2 years. Your answer will be 2. And then an issue of 2 million TT shares. Okay, issue of 2 million TT shares at a fair value of 6 ringgit. Okay, and then the TT incremental cost is 5%. So 5%, when we want to use this one, is to calculate for the PV here. So the PV here, the answer will be 2, and then the I here will be 5%. So based on, you can use a table or you can calculate that one using a calculator. So this one is the information for deferred liabilities here. Okay, at the acquisition date, DD fair value of net identifiable assets was 10 million. From that 10 million, we have a shares capital of 7. Shares capital 7. So another one, RE here is 2, and the revaluation reserve here is 1 million. Yeah. The share price at the times of acquisitions was 1 ringgit and 50. Okay, the number of DD outstanding share was 7 million. So why it give you the share price here is to find the value of DD. Yeah? Okay, value of DD here is equals to the share price time with the number of shares. So you're going to have 10.5. So 10.5 here is the fair value of DD. Okay, the value of the company. Yeah. Okay. But I said that we need to use this information here when you the NCI is based on the fair value. This information is important when the NCI is measured based on fair value. We need to use this information. But it said that the TT use appropriate shares on net asset to measure the NCI. Means that there is no goodwill for NCI. Okay, so this is information that we have. Okay, now we need to calculate the cost of investment. Okay, what will be the cost of investments here? Any of you? So 36 that. So any of you? Please, I really hope that you participate during the tutorials. So because you want to save times here. Any of you want to?
My answer is
Okay.
17,535.
17, what you have here. Can you give me for the calculate the cost. So COI here you have from cash. So how much cash that you have?
1,000.
1 million.
1,000.
1 million, is
1
it?
million. 1
Okay.
million.
Okay.
PV 4,535 million.
Okay, this one is for the deferred liability. Yes, deferred liability you have 5 million time with a PV 5 and N2. So you're going to have here is equals to 4.
4,535.
147, is it?
I calculate using PV table. So
Oh, you're
I got
using. Okay.
so I
So
didn't got
there is no 147.
no.
Okay. So because you are using a table, so table is 5 decimal points, isn't it? Okay, never mind. I just put it here because some of your friends using they calculate the figures, yeah. Okay, and then the other one.
The other one is 12 million.
Okay, 12 million. So altogether, you're going to have
17,535.
17,535. So I'm using 147 also, because okay, we're going to have two different answers. If you refer to the tables, then you're going to have 0, 0 here. Okay, so I'm using this figure, this one, yeah. Okay, so this is what you have to calculate the cost of investment. So and then you need to prepare the journal entries. Yeah? Okay, what is your journal entry for this one? Just finish with this one. The next
Debit investment in DD
Mm-hmm.
17,535.
Okay, put it here.
Credit. Okay.
Okay, and then credit.
Credit cash.
Mm.
Borrowing and share capital.
Instead of borrowing, put it as a deferred liability. Yeah? Okay.
Okay.
Okay, and then shares capital. So cash 1 million, and then deferred here is 4,535, 147. If you put up 147, and then shares capital here is 12. Yeah? So any of you have a different answer on this one? Any of you? Difference or same? Okay, so same, eh? Okay. So next, that one is to prepare a journal entry and also calculate for the COI. Okay, the next one, what we need to do for the next one, compute the goodwills on consolidations here. Okay, now we're going to calculate the goodwills here. So the goodwills here is equals to the COI plus NCI. Okay, and then minus net identifiable asset. So that is your goodwills. Okay, the goodwills here, NCI here based on the proportionate net identifiable asset. Okay, the COI, we already have that figures here, 17. I'm using that 17,535,147, yeah. Okay, and then plus NCI. So NCI here we need to calculate. So NCI that we have here is 40%. Okay, 40% time with net identifiable assets here is 10 million. Yeah? So you're going to have here is 4 million. Okay, and then minus NIA. NIA here is 10 million. So we're going to have for a goodwill here will be 11. 11,535. 11,535,147. And then this amount is solely to parents, because we are using the proportionate net assets. NCI is based on the proportionate net asset. Okay. Can you prepare a journal entry for the next one? You prepare journal entry. I already gave you the answer for the goodwill. So prepare the journal entry for this one. Any of you? You have many is there. Okay, any of you?
I want to answer, Doctor.
Okay, please.
Okay. Debit share capital. Retained earning.
Debit shares capital, okay. RE. I'll go for parent first, Okay.
Okay. Revaluation reserve.
Reserve or surplus.
And goodwill.
Okay, goodwill.
And goodwill for credit and COI.
COI. or investment in XY. It depends on what is your first journal entry. Okay, investment in DD or whatever. It depends on that one. The COI or investment in DD. Okay, what is the first thing that you use to? The terms that you are using. The journal entries here, your friends here put it as a investment in DD. So once you credit, you need to use the same term. So you need to refer back to your questions too. What is the term that you are using? If you are using the COI, then you're going to credit your COI. But if you are using the investment, credit the investment. Okay, refer back to your journal entry number 2. Okay, so shares capital, what you have for shares capital here?
4 million to 1,000. 4.2 million.
Okay, RE?
RE 1.2.
Mm-hmm.
Revaluation reserve 600. Goodwill 11,535.
This figure. Okay. And then credit your COI. 17,535.
17,535.
Okay. I'm using this figure. Yeah. So that one is for a parent. Okay. For NCI.
Debit share capital.
Okay. Shares capital. RE.
Retained earning and revaluation reserve.
Okay.
For
And then
NCI.
NCI. Okay. What do you have here?
2.8.
2.8.
2.8.
Mm-hmm.
800 and 400.
Mm-hmm. This
400. The NCI is 4,000.
4 million, yeah?
4 million.
Okay, so this is what you have for the NCI and then for both parents for consolidated journal entry on 1st of January. Okay, then we move to question 5. Thank you. So we move to question 5. Okay, for question 5, if NCI is measured at fair value, determines a goodwill on consolidation. So now NCI at fair value, so you're going to calculate the goodwills here. So the goodwills that we have here, maybe put another color. So the goodwills here, COI is still at 17,535. 147, but now the NCI is at fair value. So the NCI at fair value here, what's the value of the NCI at the fair value? Is it given here? Not given. So you need to calculate. Yeah. So remember that your NCI here, based on the fair value, we need to look at the value of DD. Value of DD, we already calculate here, 7 ringgit time with 7 ringgit, sorry. 7 million time with 1.5 ringgit. So you're going to have 10.5. Okay, from that 10.5, you need to time with 40%. So how much you have here? You're going to have 4.2, isn't it? 4.2. Okay, this one is for the NCI and then minus 10. Okay. So the goodwills that you're going to have here, 17 plus 4, going to have 21 here, 21,737 minus 10. So you're going to have here is 11. Okay, 735,147. Yeah. Okay, so this goodwill going to have need to allocate to parents and also to the NCI. Okay, for parents, we already calculate 11,535. Okay, 147. And then for NCI here will be the balance, 200 substance. Now you're going to prepare a journal entry. Okay, journal entry. Any of you for a journal entry for this one? Okay, any of you? Journal entry? Oi, are you there? I got a response only from Shazmimi. What about the rest?
Okay, Doctor.
Okay, proceed with this one.
Debit share capital
Okay, shares.
4.2 million.
Okay, so 4.2 millions. Okay, and then?
Debit retained earning 1.2 million. Then debit revaluation reserve 0.6 million. Then debit goodwill 11,535,147. Credit investment in DD Berhad. 17,535,147.
Mm.
Then the next one is for non-controlling interest.
Mm-hmm.
Debit share capital
Can I put it here? Shares capitals for NCI.
2.8 million. Retained
Okay.
earning debit
800.
0.8 million. Revaluation reserve 0.4 million and goodwill 0.2 million. And credit non-controlling interest 4.2 million.
Okay, so 4.2 then. Okay. So thank you for that one. Yeah. So the difference here is only for the journal entry for the NCI. So when you compare between these two, if you use a proportionate here means there is no goodwill. But when we use a fair value, there is a goodwill for NCI. Yeah? So the same amount that you have here, 2.8, 800, 400, but this time you have a goodwill. So you have a goodwill for NCI. So that is a difference. Only this part have a difference here, the goodwills that you have for NCI. Okay. So that is what you have. Okay, now we move to the next question here. Question 6. If you have any question, please ask it. Okay, so question 6 here is quite a long question. So try to look at this one. Okay, time acquired 70% interest in red. Okay, that means that the NCI have another 30% NCI. Okay, the acquisition was paid in cash 180 and issued 30 shares at a market value of 15. So you're going to have your CUR here in terms of cash, you have 180. And then the other one is the shares capitals that you have here, 30 times 15. So you're going to have here is 450. So altogether, you're going to have 630. Same as this one. Okay. So if you don't want to calculate, you just use this figure. Okay. The fair value of the remaining 30% NCI was 270. So this is NCI at fair value. Fair value NCI is 270. Okay. The other cost incurred for the acquisition was legal fee 8, consulting fees 12, incidental cost of 10. So this one is considered as the acquisition expense. Acquisition expense you have 8 plus 12 and then plus 10. So altogether you're going to have 30. So 30 here will be the acquisition expense. So this is what you have for the financial positions and also the fair value of the assets and liability. So assets and liability here is already at fair value except for this 3. Yeah? So except for this 3, the land that you have here, the compare book value and fair value, there is an increase by 50. This one is another 50. This one is another 10. So altogether you have 110. So 110 here is increase in your revaluation surplus because it's increase in assets. So it means that you're going to have your revaluation surplus. Okay, and then time use a fair value method to measure for the NCI. So the value of NCI here will be 270. So you can find the total amount that you paid here. Okay, the total amount that you paid for parent paid 630, NCI paid 270. So altogether, you're going to have 900 because later on we're going to use information to find for the goodwills. Okay, so we're going to prepare the journal entry for the acquisitions at the acquisitions date. Okay, any of you? Journal entry to record for the acquisition. We're going to have 2 journal entry number 1 and then journal entry number 2. What are you going to have for this one? Any of you? So please, we have another
Me, Doctor.
20 minutes. Okay, can you just proceed?
Yeah. The
Okay.
first journal entry, investment in subsidiary rate Berhad,
Uh-huh.
debit side 630,000.
You're going to a little bit louder, please.
Investment in subsidiary rate Berhad,
Okay, wait a bit.
630,000.
Okay, investment in red.
Yeah.
Okay, and then you're going to debit 630 and then credit.
Credit cash
Hmm.
180.
Hmm.
credit share capital 450.
Okay, thank you. That was the first one. Okay, second one.
The second one,
Just proceed.
debit acquisition expense
Mm-hmm.
30,000. Then
Mm-hmm.
credit accounts payable 30,000.
Okay, accounts payable. Account payable. Is it mentions about cash or what? I just want to look at this one. Questions. What you have for the questions? The questions mentions anything that what is my questions? I cannot find my questions. Anything mentions in the questions? Either that one is paid cash or whatever. Just try to look at it. Okay, we're going to look at here. Anything mentions about the legal fee and were paid or not paid? Just want to confirm this one. Other costs incurred for the acquisitions. Okay, it's also not mentioned is that one is paid or not paid. So we can accept both. Okay, if that one said paid, then you're going to credit cash. But in this case, since it's not mentioned about that one, either it's one said paid or not paid. So we're going to use either account payable. We can accept both because it's silent about this one, or cash, either one. Okay, so thank you. Okay, the next one. Can we proceed with the next one? Okay, calculate the goodwills here. Any of you for the goodwills? Hurry up, we have another 20 minutes. So many things that we need to do. So the next one, goodwill. Any of you goodwills? Spread.
I try.
Can I try, Doctor?
Okay, yeah, please. Okay, so the next one, the second person going to try for the second one. Okay, who's going to try for the goodwills here? Okay.
Cost of investment 630.
Okay, so you're going to have COI 630 plus.
Non-controlling interest 270.
Okay, so altogether you're going to have 900 yeah. Okay, minus NIA
800.
800. How do you get that 800 here?
Because
How to calculate that one? It's your net asset, isn't it? It's a difference between your asset minus your liability. So the asset that you have here is 785 minus liability that you have here is only 2. 2 which is 95, 60 plus 35 and then plus 110 which is come from your revaluation surplus. So minus 800. So your goodwill here will be 100. Okay, now 100. Okay, we need to allocate to parent and subsidiary. NCI.
saya tak.
Not yet. Okay, never mind. Later on. Okay, so this is the amount of goodwill, but you know that this goodwill need to be allocated to parent and NCI because both of that, and because we are using the NCI is at a fair value. Okay, so we look at the next one, journal entry. Okay, the next persons. Okay. Any? Tadi kan ada 2 orang, so the next one, I think there's a guy there. Okay, who's going to prepare for the next one? Journal entry, journal entry. Consolidations. 1. Cik, hurry up. Okay, any of you?
Okay, Doctor.
I will answer.
Okay, so who's going to proceed? Any of you? Okay, can I have the guys? Okay, the lady, the
Okay.
next one. Okay, so the
Okay.
guys can I have. Okay, any of you? Okay, hurry up. The first one, the entry. Lah. Okay, so so proceed.
Land, debit land.
Okay, this one is for revaluation supplies, isn't it?
Yeah,
Okay, land.
50,000.
Okay.
Building, debit building,
Hmm.
50,000.
Okay.
Debit equipment, 10,000.
Hmm.
Credit revaluation reserve, 100.
Reserve. Okay, reserve or surplus is the one. What is the term that you're using in your balance sheet? In the balance sheet, it's used
Revaluation reserve.
reserve. Okay. So 110. Okay.
110.
The next. Okay. The next journal entry.
Debit share capital,
Okay, you're going to
210.
shares capital. This one is for parent, For parent. Shares
Yeah,
capital.
parent.
210.
210.
Okay.
Debit retain earning, 273.
Hmm.
Debit revaluation reserve 77. Goodwill debit 70. Credit investment in Red Berhad 630.
Okay, just repair later on. I want to ask you how to get this 70. Okay, for the NCI, same thing.
100,000 times 70%.
100,000 you time with 70%. Okay.
Yeah.
Yes, okay, 70% from here. Okay, so the next one, can you go for the NCI here? NCI?
Debit share capital
How much?
90.
90.
Debit return earning 117.
117.
Debit revaluation reserve 33.
Goodwill?
Debit goodwill 30. Credit non-controlling interest 270.
Okay. Done with this one. Okay, you calculate this one is 70%, yeah? Or you can calculate this one for parents 630. 630 minus parent portion is 70% time with 800, yeah? So this one will be 560. So at the end you're going to have 70 here. Okay, 70 per parent means that another 30 to the NCI, yeah? Okay, so this is what you have. Okay. Then prepare consolidated. This one take time. So you go for the last one, the E first. Then later on we prepare for the consolidated. Okay. Okay. Any of you for E? Go for the if the NCI based on the proportionate of shares here. Okay. Can we prepare the journal entry for this one? Just need to prepare the journal entry for NCI only. Okay. What will be? Okay. NCI shares capital. RE. What else that you have? Any of you?
Revaluation reserve.
Okay. You have revaluation reserve. And then shares capital still 90, isn't it?
Yeah.
Okay, just close this one, yeah. Okay, 90. This one, 117.
117.
Okay.
33.
Okay, what else that you have?
And credit NCI.
NCI. How much you have here?
240.
Okay, so means that there is no goodwill, yeah, because based on the professionals here. Okay, how you find this one? 240 here is I just give you prepare in terms of proper format. You start with the non-current asset, the current asset, equity, liability. But the one that I give you here is only the ending figures. Yeah, you check this one. Yeah. Okay, for cash here. So for cash here, you're going to total up that two figures. You're going to have for that cash. See how much you have for the cash. Okay, what is the value of your cash here? That is my question.
265.
You're going to have 265.
265.
Okay, for the cashier will be 265. Okay, I just put it here. 265. Just add that one. 265. Okay, and then what else do you have here?
Investment is 0.
And investment will be 0. Okay.
Account receivable 150.
Account receivable will be 150. Okay.
Inventory 150.
150 also. Okay. And then
Land
land.
650.
You're going to have
50.
650. 650 here means when you add together and then plus another 50, isn't it? For the revaluation surplus. Okay, for buildings.
Building 800.
800. You add this one together and then plus another 50, yeah? Okay, and then for equipment.
470.
470. Okay, 470. This one plus together and then add another 10. Okay.
Goodwill.
Okay, so you have one more items here. It's a goodwill. Okay, goodwill you're going to have here 100.
100.
So done. But when you prepare, you prepare based on a proper format. You start with the asset, the current asset, the equity and liability. I just give you the ending figures only. Okay, and then shares capitals. How much you have for the shares capitals?
1,500.
1.5 million here. Because when you add and then you need to eliminate so and then at the end it come this figure only. Okay, RE, what will be your RE here?
420. 420.
Okay, this amount 420. Okay, long term loan
Revaluation. Long-term loan 60. 60.
60. Okay, and then
Account payable 335.
335. And then you have
NCI
NCI. Okay, suppose that NCI. Can I put it here? NCI. What's your NCI that you have here?
270.
270. Okay, NCI should be under items of equity. Under equity item, you have shares capital. Okay, you have shares capital. And then you have RE. And then you have NCI. And then one more thing. What do you have here?
Revaluation reserve.
A revaluation reserve. Yeah? Going to have a revaluation reserve. Of how much you have for revaluation reserve? Yeah?
0.
100. Okay, so done. At the end, make sure that your total assets here that you have here, how much your total asset that you have?
2585.
2585. And then it should be equal to your total liability also should be 2585. Yeah? Okay. So any questions that you have here? Any of you have a different answer? It's a simple, isn't it? For as compared with the tutorials too. Okay, so any questions that you have here? Any questions that you have? Is it okay? Any different answer that you have for question 6? Okay, similar. Okay. So thank you for those who are response to this answer. Okay, for the next class, okay, I'm still here. If you I just want to inform you for the next class, because when I discussed with the previous class, class before this, they said that they want to proceed with the tutorials too for this coming Thursday's class. So we're going to stop your notes for a while for chapter 3. So that for this coming class, we're going to discuss on your tutorials too. If you have time, then we're going to proceed with your notes. But if there is no time, we just try to finish with your tutorial too with this coming Thursday so that you have a week before your mid-sem to study for the tutorial 1 and tutorial 2 so that you can understand the things that you have in your tutorial 2 especially. Yeah? So this coming Thursday class, we're going to proceed with your tutorial 2. Make sure that you have the questions together with the answer. I'm going to discuss it like this way. I need to have your response, so we're going to finish at 1. So hopefully that there is 6 questions for tutorial 2. It's a long 6 questions, so it takes time for that one. Yeah? So any questions that you have here? Before, for those who want to leave the meeting, you can leave the meetings.